Welcome to Breaking News to Trading Moves. Today we're focused on Washington, D.C., specifically the talks happening between India and the U.S. These discussions are trying to smooth things over after, well, months of tension around trade barriers and tariffs.
Yeah, the situation's been pretty tense. The U.S. has tariffs on some Indian goods, running as high as 50%. We're talking about things like textiles, gems, seafood, sectors important to India.
50%, wow.
Right. So the goal here is really to work towards a phased deal. The idea is to, get trade flowing more normally again, and maybe just as importantly, direct billions in spending towards certain U.S. exporters as part of the bargain.
Got it. So for our listeners today, we're going to look at what this all means, which U.S. sectors, which companies might actually benefit if these talks go well. And maybe more pressing right now, who's under pressure if they stall out. Let's start with the positive side then. If these trade barriers do come down, who's potentially looking at a boost?
Well, first on the list, I think, is U.S. energy, specifically liquefied natural gas exporters, LNG. India, they really need reliable energy sources, and they've basically signaled they'll buy more U.S. energy and gas if these talks make progress. They're actively looking for U.S. LNG.
Okay, LNG. But isn't that dependent on huge investments and long-term commitments? Why is India seen as such a positive right now?
That's a fair point. But India is seen as a really high-growth market, a long-term customer. That helps balance out risks, say, compared to older European contracts. And crucially, a political agreement here kind of de-risks that long-term supply commitment.
Right, makes sense.
So companies that stand out here are Cheniere Energy, that's ticker LNG, EQT Corporation, ticker EQT, and Chevron, ticker CVX. For them, a deal with India helps lock in demand, justifies future building.
Okay, so energy is definitely one to watch. Now, Washington has also been pushing for more U.S. defense sales to India. How does a thaw in relations affect that industry? Does it speed things up?
It definitely can. You have to consider what are called offset commitments. For U.S. defense and aerospace suppliers, better relations are a big help. India often requires defense contractors to reinvest a portion of the contract value back into India. That's the offset.
Of those requirements.
Exactly. They can complicate things, but a successful trade agreement often includes ways to streamline or, adjust those offset rules. This can speed up deals that are already sort of agreed upon. Planes, engines, advanced systems. It's not just about new contracts. It's making the existing big ones move faster.
So progress in these talks basically helps clear the way administratively.
Precisely. You look at companies like Lockheed Martin, ticker LMT, Boeing, ticker BA, and RTX, that's RTX. These involve potential sales of really advanced stuff, fighter jets, missile defense. Faster approvals mean a shorter sales cycle, better revenue visibility.
We also heard that farm goods are often a sticking point. Agriculture seems to come up in almost every trade talk involving India. Why is that area so difficult?
Yeah, agriculture is very political for both countries. You've got domestic subsidies, protections for farmers. India has historically guarded its agricultural sector very closely.
Okay.
But if they manage a compromise, one that actually trims some of those barriers, you'd see more U.S. grains and oilseeds heading to India pretty quickly. It's just too big a market for U.S. agriculture to ignore.
Like soybeans, things like that.
Exactly. Things like U.S. soybeans, certain nuts, they've faced barriers. So for the big U.S. agriculture traders, even a small reduction in tariffs could mean a large increase in volume.
And who are the main players ready for that?
You're looking at the giants like Archer Daniels Midland, ticker ADM, Bunge, ticker BG, and Corteva CTVA. These are the companies with the infrastructure to handle processing and shipping globally. They need predictable market access, and a deal provides that stability.
Okay, so we've covered some potential winners. Now let's switch gears. What about the sectors feeling the heat right now? Who faces pressure if these tariffs stay high or if the Washington talks just fizzle out?
First, you really have to look at U.S. apparel and fashion retailers. Their supply chains are often heavily reliant on India for clothes, leather goods, home textiles, that sort of thing.
Right.
If those 50% tariffs stick, it directly impacts what's called the landed cost. That's the total cost to get a product from the factory onto the U.S. shelf. Shipping, insurance, and crucially, these duties.
So that cost just shoots up.
It really does, and it squeezes the retailer's margin because they either have to eat that cost or try to pass it on to consumers, which risks losing sales.
So it's not minor adjustments. It hits their bottom line directly if they can't raise prices.
Absolutely. Companies feeling this include Gap, ticker GPS, PVH Corp, ticker PVH, and Ralph Lauren, RL. Their pricing power, their profits are pretty sensitive to any relief coming out of these talks or lack thereof.
Another area mentioned was gems and jewelry. That's a specialty market, but how significant is the impact there?
Well, India is a major center for cutting, polishing, manufacturing gems and jewelry. So for U.S. jewelers and specialty retailers, the current tariff setup has definitely made things more expensive and complicated when importing from India.
Okay.
If these high tariffs continue for a long time, you could see tighter supply chains and, importantly, higher prices for U.S. sellers to acquire these goods. It's hard to quickly replace the quality and volume that comes from India. Retailers then face that tough choice: lower margins or higher prices for customers.
And which retailers are particularly exposed there?
You'd want to watch Signet Jewelers, ticker SIG, and also big department stores like Macy's, ticker M. They count on steady, cost-effective access to these Indian specialty goods. Every month, the stalemate goes on, the pressure builds.
Okay, lastly, U.S. steel producers often come up in trade talks. But the situation here sounds a bit different, more nuanced.
That's right, because actually, in the short term, U.S. steel producers are kind of shielded by the stalemate. The high tariffs on Indian metals limit competition coming into the U.S. That's generally helpful for domestic producers like Nucor, United States Steel, and Steel Dynamics.
So they're benefiting for now.
In a way, yes. The risk, the potential downside for them, really only emerges later. If a comprehensive trade deal eventually does cut barriers on Indian metals, then U.S. steel companies would face more import competition over time. That could affect domestic prices down the road.
So protected today, but a successful deal might bring future challenges.
Potentially, yes. So for today, their position is okay, maybe even slightly helped. It's the long-term structure of any deal that matters more for them.
And those company tickers again?
Right. That's Nucor, NUE, United States Steel, ticker X, and Steel Dynamics, STLD. Their fortunes are tied more to the final shape of an agreement, not necessarily the immediate outcome of these current talks.
Okay, we've looked at potential upsides and the current pressures. Let's try to pull this together into some key things for listeners to watch for as news comes out of Washington.
Yeah, I think there are three main angles to keep an eye on. First, if the talks seem to be moving towards some kind of initial deal, like a phase one agreement, watch for actual money flowing into those US LNG and defense companies we mentioned. That investment shows the market believes a deal is happening.
Okay, so follow the money.
Exactly. Second scenario, if the rhetoric gets tense again, talks stall, tariffs stay high, then you monitor the earnings reports from those retailers, apparel, jewelry. Look for mentions of inventory costs going up or margins getting squeezed because of those duties.
That's the pressure point indicator.
Right. And third, keep an ear out for any announcements about special deals for specific sectors. Sometimes you see energy or defense or maybe agriculture get some relief before a bigger agreement is reached. These carve-outs can be the first real sign that a broader deal might actually be possible.
That makes sense. It really highlights how quickly this list of winners and losers could change based on, well, just the language coming out of D.C. Trade talks certainly create a lot of uncertainty.
They do. And on that note, please note that this is not financial advice or a recommendation to buy or sell any security. This discussion is purely the opinion of the author of the material reviewed.
Thank you for tuning in to Breaking News to Trading Moves. We'll talk to you next time.